Equity markets have been moving from strength to strength. What's aiding this rally and what's the outlook for the months to come? I have with me Shibani Kurian, Fund Manager and Head Equity Research with Kotak Mahindra Asset Management Company Limited. Hi Shibani, and let's talk about this rally that we are seeing in the Indian equity markets. What's causing the markets to move from record high to record high?
Hi. So it seems that the stars have aligned both for India as well as for Indian equity markets. So India just won the T20 World Cup after 17 long years, and Indian equity markets are at all-time highs. And when you look at calendar year to date, India globally is among the best performing markets. So a few key things here. One, after the election and the formation of the government, it is clear that the policy focus remains pretty much what it was in the last decade. So the government will possibly build on the work that they have done. So focus on capital expenditure over revenue expenditure, infrastructure, manufacturing. All of that from a policy perspective remains pretty much intact. The second aspect is, of course, earnings. If you look at FY24, Nifty EPS growth of almost 24%, which has been actually higher than what the consensus was building in at the beginning of the year. And therefore, earnings have been fairly strong and expectations are of strong earnings delivery. And the third, of course, has been flows, where domestic flows into equities as well as mutual funds from the retail side have been extremely strong, lending support to the market, even while the FII flows have been erratic. So a combination of all these factors have worked in terms of how the market has moved in the recent past.
Let's talk about valuations, because I think the one complaint that investors have when they look at Indian equity markets is that the valuations are way too expensive, especially when you compare it to its EM peers. Do you think these valuations are deserved, especially now that we see it from the point of view of the FY24 earnings and the outlook for FY25 as well?
So absolutely. So if you look at India vis-a-vis its emerging market peers, India has always traded at a premium valuation. And that's a reflection of the growth. And now that with growth delivery being actually somewhat better than expectations, some of that valuation differential is possibly here to stay. So when you look at India on a PEG basis, which compares the PE with the growth of India vis-a-vis emerging markets, India stands out fairly well. And therefore, from that perspective, we are not super expensive. If you look at expectations of earnings from here on, earnings expectation for Nifty, for instance, are of mid-teens earnings growth. Cash flows generated by Indian companies are at its highest ever. Balance sheets have been cleaned up and therefore leverage is low. And ROEs of Indian markets are again close to all-time high. So you have growth and fundamentals which are possibly supporting valuations. Now in that context, however, we must also look at risk reward. And when we look at risk reward between large, mid and small, large caps appear to offer better risk reward because they are trading at a premium but at a slight premium, while mid and small caps are trading at a significant premium to their own history and vis-a-vis the large caps. So when we are looking at mid and small caps, we are looking at companies where there is earnings visibility but where valuations are reasonable. We are cautious on companies where valuations are extremely stretched or where there is a mismatch between fundamentals and valuations.
A big event and a big trigger point for the markets from here on will be the budget, the final budget for the new government. What are your expectations, and what would the equity markets be watching out for?
Absolutely. So I think in the near term, budget is going to be very keenly watched out for. We'll have the budget this month, in the month of July. A few things from my side in terms of expectations, as we were earlier discussing, that the infrastructure, manufacturing and capex push that the government has been bringing forth, that will possibly continue, and therefore investment-led long-term growth. That's going to be the key. The other debate that's been happening is about consumption trends, where premium consumption has clearly been ahead of mass, and there has been a lot of impact in terms of the bottom of the pyramid post the COVID crisis. Now, the question that often arises is that will government provide support to this segment in bring back demand? In that context, when you look at two things, one, tax collections have been buoyant, and second, we've also received dividend from the RBI to the tune of 2.1 lakh crore, and that gives the government some more room to not just focus on investment, but also help demand at the bottom of the pyramid, and that's something that we will keenly watch out for. The third aspect will be the fiscal consolidation path. the government has outlined that by FY26, they are targeting a fiscal deficit which is 4.5% of GDP. And we expect that the government will move forward in the path of fiscal consolidation. And that's important for India on a longer term basis, ratings, etc. And therefore, that's going to be the third aspect from the budget, which will be important to watch out for.
Okay, and to wrap it up, what's the advice or what's the strategy you'd recommend equity mutual fund holders adopt from here?
So first and foremost, stay very, very disciplined in your approach to equity markets. Focus on asset allocation. What we have been saying is that when you look at market multiples today and valuations, in terms of the overall asset allocation bucket, one should be neutralish as far as equities are concerned. And therefore, that is something that we continue to advise from an overall asset allocation bucket. Slight tilt towards large caps where risk reward is favorable vis-a-vis mid and small caps, and also be very, very mindful of fundamentals and valuations when you're looking at the mid and small cap segment. But net, stay invested, stay disciplined, and focus on asset allocation with a long-term investment horizon. So that's the key towards wealth creation over time.
That's very well put. Thank you, Shibani, for joining us.
Thank you so much.
And thank you to all of you for tuning in. This is Kotak Mutual Fund. Stay tuned. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.